If you are a little bit more of a knowledgeable trader, options trader, or just a little bit more of a degen, you most likely have heard the term 0 DTE options. What are they? Well, they're pretty much options that expire the same day or in less than 24 hours. So this is what we're going to be covering in today's video. Degenerates from Wall Street bets have done multiple thousands of dollars in returns, even millions of dollars in returns by trading 0 DTE options, but they also lost a lot of money. This is pretty much your bread and butter on Reddit if you go in the Wall Street bets subreddit. But what are these options? Well, they are options that have a very short expiration date. For stock options, they are on the same day by the time the market closes. But for crypto, because the market never closes, 0 DTE are usually less than 24 hours options. So our options that you buy right now, for example, it is Sunday for me, the 28th, and I open an option that is expiring 8 a.m. UTC for the 29th. It is less than 24 hours for this option to be expired. So there's a lot of risks involved when you open a position this short. There's a lot of time decay, which is called theta, if you know the Greeks. The underlying asset needs to move a lot. There needs to be huge volatility for you to profit. So why would someone trade these 0 DTE options? What are these? What are those? And can you do those with crypto? Well, starting from the last, the answer is yes, you can do this with Bitopics. Again, if you want to check it out, the link's going to be the first in the description for you to go to Bitopics and check it out itself. Well, 0 DTE means 0 days till expiration, meaning in just hours, this option will cease to exist. It will expire. So it can be kind of tricky for you to understand why would someone do such a risky thing. But if you understand the returns that a person can have if it goes in your favor, then you know why degens love these options so much. In both markets, it can be in the stock market, but it also can be in the crypto market, because again, options, derivatives for crypto are becoming slowly a huge share of the market, and they will become the biggest share of the market in the future. I believe that 100%. This is pretty much day trading. So these same day or 1 day to expiration, just like for example in crypto, or hours to expiration, they are very risky because in just a matter of hours, the option, as I said before, will cease to exist. Let's say, for example, a trader buys an at the money Bitcoin option. So Bitcoin is at $63,000 right now, and the person buys a $63,000 Bitcoin option expiring tomorrow. So 15 hours more or less to go. Well, if Bitcoin falls to $62,000, $61,000, $60,000 in a matter of hours, there's very little possibility and probability that Bitcoin will rebound and close above, meaning that these options will become in the money. So if this option expires out of the money, he opened it at the money and he closed out of the money, he's gonna lose the premium that he paid for it. But if the opposite's true, if he opened that at the money or out of the money and then becomes in the money, if implied volatility is his friend and is in favor, he's gonna make a huge ROI out of this trade. The biggest risks is not even the underlying asset moving against the option that you have, but the biggest risks for the traders that open 0 DTE options is Theta Decay. Of course, Theta Decay is something that is a little bit more hard of a topic to explain, but if you're doing this, if you want to be a degenerate, you might as well understand what Theta Decay is. Theta is one of the letters, one of the Greek letters that we use for options to understand movement, to understand decay, the price decay throughout the time, to understand interest rates. For stock options, for crypto, we don't have that. To understand a lot of variables inside an options price, we use these Greeks. We have delta, we have gamma, we have theta, we have vega and rho. But delta, theta, and gamma are the ones they use the most. And theta is the time. Time affects your option. Time, it erodes the pricing of your option. This is what is called theta decay. The closer it is to the expiration, the more time is going to eat away the premium of your option. So you can still get the direction right, but because of Theta Decay, even though Bitcoin, yes, is indeed above your strike price, but for a multitude of variables, because you opened it too late, or because Bitcoin moved just above your strike price or didn't move fast enough. Again, there's a huge amount of variables that it can influence that, IV lowered, and a lot of other reasons. But because of that, you can also lose on a trade that you believe would be profitable because of the time decay, the Theta Decay. Again, because options are sensitive to time. Time eats away the premium of an option, which when you're selling an option is fantastic, because if you sell it at 10, you want it to expire worthless because you sell an option and then you have to buy it back to close. So if you sell it at 10 and you buy it back at 0, you have a $10 profit. But if you buy it at 10 and you close it at 0, now you have $10 loss. But if you buy it at 10 and you sell it at 15, you have that $5 profit. So you understand how Theta Decay, it is very, very profitable for sellers, but not for buyers. So buyers need to pay a lot of attention when they do 0 DTE options, mainly because they are running against time and you can never beat time. In the final hours before expiration, even a normal sized candle, a move that is like relatively normal, it can affect so much the pricing itself of the option because it can bring it from out of the money to in the money or in the money to out of the money. So you make sure to understand that before you open the position. 2, if they are so risky, why do a lot of people, and I mean a lot of users, degenerates, especially in the traditional market, why do they go for these options? There's a lot of answers that we can give, but we can sum up to 4 main pillars of why traders decide to go for 0 DTE options. Well, one of them is great leverage. You have a lot more leverage for 0 DTE for a leap, for example. So because of expiration, because it is so close to expiration, 0 DTE options offer a huge amount of leverage for the user. So this brings us to point number 2, which is cost. The cost for a 0 DTE option is way cheaper than for, let's say, expiring in a week or expiring in a month, because you have a lot of time, and time is intrinsic value of that option. So time gives the option way more price. So the more time you have on that option, the more time will be weighing inside of the option's price itself. Again, so the less time you have, it will be eating away the premium of the option. Another reason, this might not be a strong pillar, but another reason is that it is efficient, way efficient for movements, for news events that are happening on that day. So there's a lot of people saying sell the news, buy the news, whatever it is, whatever you believe it is. But there's a lot of people trading the news. It doesn't matter if they're bullish or bearish, there's a lot of people trading the news. And because of that, during the news, during data reports, during huge events, there will be a lot of volatility. The IV will be spiking a lot. And with high IV, you have higher chances of making way more money. So people trade these 0 DTE options as pretty much day trading because they want to profit from these movements, from these events, from this data being released. So there's earnings reports for stock markets. For options, there's maybe Vitalik saying something. There's Elon Musk saying he loves Dogecoin or he loves Bitcoin and the Bitcoin rallies again. There's El Salvador saying they're going to build a $1 billion Bitcoin mining inside a volcano. So these sorts of news, they tend to weigh and move the price of Bitcoin or the price of other underlying assets, making sure they spike up or down in price. And traders can, because they are so leveraged, traders can profit a lot from 0 DTE options, trading them. And last but not least, higher frequency of opportunity. Again, you have daily options for you to try to profit from. Instead of trading one option per month, for example, or one option per week, like I do when I sell an option weekly, you can try day after day. So let's say you try today and you're not profitable, you still have 6 other days because we don't close on weekends on the crypto market. So you can still trade 6 other days trying to make that money back or be profitable day after day after day. So a whole lot of opportunity if you compare to other expiration dates. Again, this doesn't mean that 0 DTE are for everyone. They are not for every trader. So if it is something too risky for you, I don't advise you actually trying that out. I advise you to stick to your plan, stick to your risk management, maybe just learn a little bit more on how to use 0 DTE to your profit instead of speculating or just burning money away like a degen, like a lot of people do. A lot of people use 0 DTE or shorter expiration dates, like 2 days, maybe 3 days to expiration, as some sort of protection. So let's say there's huge news that BlackRock is going to sell all their Bitcoin. Well, this for sure will bring a lot of negativity to the market. So the fear and greed index will going to be all over the place. Everyone is going to be fearful. Everyone is going to be selling their Bitcoin because they know they're going to be dumped on by BlackRock. So just these news are going to be scary for everyone else, making the pot stir, and everyone will be selling their Bitcoin. What a lot of people are doing with these 0 DTE or short expiration dates, they're using it to protect themselves. So they're buying puts, they're protecting their portfolio for this shorter period of time. Imagine being able to protect your car like an insurance company for just 3 days. Let's say you're gonna buy a car or just going to have a car protected for the amount of days you're going to go in a trip. And it's going to be a pretty dangerous trip, so you pay for this insurance and you are protected throughout the whole trip. Trip's going to be at the 1 day, so you're just going to go and come back very, very fast, but you're going to be protected. So you can see the efficiency of protecting your portfolio, protecting your assets. Just on that time frame, on that small window of time, it can be profitable and also cheap for you to do so. And depending on the strategy or depending on how much the loss is, it can make your portfolio way more valuable if you're able to write it down a lot, or the fall of the underlying asset is a lot for the put. For example, if you saw the movie The Big Short, for example, where Michael Burry was betting against the housing market, it was like he was buying a put. And then when everything went down, when everything in the housing market went down, he profited on the losses of everyone else. So he pretty much protected himself. He hedged, but not only hedged, he also speculated and profited from a negative event. So you can see how zero DTE options, or shorted like 1 day, 2 days to expiration, how they can be very, very profitable if you're able to not predict, but understand conditions and act before everyone else does. And because they need way less money, you can use a fraction of your portfolio to protect the entirety of your portfolio. If your portfolio is $50,000, you're not going to need $50,000 in puts to protect your 50K portfolio. You would need $1,000, maybe $2,000, depending on the strike that you choose or the expiration that you choose, to protect yourself. And if nothing happens, and if the market or Bitcoin never ends up tanking, going down because the news were fake that BlackRock were going to sell the Bitcoin, then yes, you're going to lose that premium. But again, it's just like an insurance. You're insured, but if your car never crashes, you're not throwing away that insurance money. Well, the same applies here. You're not throwing away that money that you bought these puts for. No, it was just a protection. Protection wasn't needed, so good for you. It's better that way. Your assets didn't suffer any losses. So you can see how profitable this can be in both ways, pretty much, on the protection side of things. And we can end with an example here for the topics. You go for the options tab, you select Bitcoin. Of course, you can select Ethereum as well. But we're going to go for Bitcoin because that is the example that we gave. And let's say for tomorrow, so in less than 24 hours, now 13 to 14 hours from the time of recording this, let's say we believe Bitcoin tested the 62,000, tested again. Now Bitcoin will go back to $70,000. Maybe we'll go back to $67,000. We're going to buy an at the money call just because we believe Bitcoin tomorrow by 8 a.m. UTC, which is when it expires, we believe it will be way above than it is right now. We go to the $64,000 right now and we open one contract. So you see that instead of having a full Bitcoin for you to profit, you're going to have one contract that is pretty much just like having one Bitcoin, but you're going to be paying $383 for that to have a full contract. Of course, you can go shares of a contract. You can go 0.1, like fractions of a contract, which you cannot do with stock options. But you can see you're going to pay just $40 to open a fraction of a contract. And if Bitcoin goes indeed above the 64,000, volatility also helps you. You're going to make a lot of money because it is super, super leveraged. And that at the money that we said before becomes in the money, meaning that now it has a lot of intrinsic value for you to profit with that money. And if you want to do the protection, like we said, let's say you just heard very bearish news and you're scared that your Bitcoin is going to tank, you can do the same thing. And let's say you buy a $62,000. So if Bitcoin goes below $62,000 by tomorrow, you're going to profit a lot. This is going to be like a parachute for your portfolio. It's going to be an insurance for your portfolio in case Bitcoin tanks. So the more Bitcoin tanks, the more this option will grow in value, hedging the losses that you take on one side with the profits that you're taking from this option. And you can see how cheap it is, $62 to open a full contract at $62,000. So I hope I was able to clarify 0 days to expiration options for you. If you have any other questions regarding these sorts of more risky options and how to do that, don't forget to comment down below. I'll be there answering all the questions that you have or anything that you want to talk about. So I'll wait for you guys in the comments. And if you got all the way here to the end of the video, don't forget to like, subscribe, and turn on notifications so you don't miss when we post next videos. Again, thank you very much for watching, and I'll catch you guys in the next one. Peace out.